Welcome everybody. In this video I'll explain why I think a potential weakness of Bitcoin is on the horizon, why this may actually help fund flows into Chinese equities, and why some people invested in Bitcoin may actually be incentivized to keep the China narrative very negative. And first off, I have to say, Bitcoin is this fascinating, important story in the financial world. Bitcoin is now trading near to 100k. It's really a success recently, and I've personally been invested in this store of value thesis for some time, right? So now becoming less bullish on Bitcoin isn't really a knee-jerk reaction, but it's rooted in some fundamental issues that I want to explain now about centralization with Michael Saylor, Bitcoin's new reliance on passive fund flows, and importantly, the ideological narrative around Bitcoin and some catalysts that may not longer hold true. So stick around because this video is packed with insights. Let me start with some context. I've been bullish on Bitcoin before, and for good reason. I entered the market late back in 2019 and 2020, so not exactly an early bull, but when Bitcoin was around 3,000 USD. So I made, still really good gains here. I sold my position during the next hype cycle, achieving a 10x. Why? Well, here in Germany, we have the unique opportunity to sell crypto tax-free after holding it for 1 year. And with the Federal Reserve pivoting on interest rates, I saw dark clouds forming and took advantage of that for Bitcoin, in contrast to some stocks that I didn't want to sell instead. So in summary, I'm not against Bitcoin as an asset class. I'm recognizing that. I actually made my personal gains on that. However, in this video, I'll try to explain why I have shifted my views on that. So let's talk about Michael Saylor and Microstrategy. Initially, I admired Saylor. I even made a video about him. I respected his risk-taking, his clear explanations of the Bitcoin bull case, and his conviction. But over time, Saylor and MicroStrategy have become a problem for Bitcoin. MicroStrategy has essentially turned into a money printing scheme, issuing shares and bonds to buy more Bitcoin. While this may seem bullish on the surface, it's created a situation where both MicroStrategy stock and Bitcoin are now tied to unsustainable swings. This dynamic resembles a Ponzi-like structure, raising new money to buy more Bitcoin, which in turn inflates both MicroStrategy's stock price and the Bitcoin price. It adds to Bitcoin's centralization problem because one corporation now holds such a large share of the supply. And let's face it, this isn't what Bitcoin is supposed to be about. Saylor has almost become the face of Bitcoin, and while I respect his intellect, Bitcoin was never meant to have a single spokesperson or centralized figurehead. This hurts the Bitcoin story more than it helps. At its core, Bitcoin has become a store of value for capital and liquidity seeking to diversify out of the USD. This makes sense in an environment where there's fear of dollar devaluation. Since 2019-2020, Chinese tech companies have lost an estimate 1.5 to 2 trillion in market capitalization. The China tech crackdowns, geopolitical risk, and the Ukraine conflict have made Chinese assets appear uninvestable. What's fascinating is that this loss in value almost mirrors the 2 trillion gained by Bitcoin and the broader cryptocurrency market during the same period. It's as if capital fleeing Chinese equity found a new home in Bitcoin. But is this trend sustainable? And what happens if Chinese equities stage a comeback? Bitcoiners, and often the right-wing side of the spectrum, have built a strong ideological narrative around Bitcoin. It's positioned as a hedge against the US and a symbol of freedom and decentralization. To me, it's no surprise that Bitcoin proponents like Cathie Wood often frame negative headlines about China, whether it's about the economy, demographics, or even branding China as an enemy. These arguments align perfectly with their incentive to position Bitcoin as the superior alternative. Whenever I hear such arguments now, I think about it how it fits their need to push Bitcoin higher and why it's in their interest to keep China down. It's not just a geopolitical narrative, it's a marketing strategy for Bitcoin. But this creates a fragile dynamic. If the China uninvestable story unravels, Bitcoin's ideological narrative could lose some of its appeal. Another issue is Bitcoin's new reliance on passive fund flows. The inclusion of Bitcoin's related companies like MicroStrategy in major indices, as well as the approval of Bitcoin ETFs, has brought significant liquidity into the market. But here's the catch. Passive index buying and selling isn't driven by conviction, it's driven by capital flows. If markets turn sour, we could see significant sell-offs in Bitcoin and Bitcoin-related stocks like Microstrategy. Meanwhile, Bitcoin is running out of catalysts. The liquidity from ETFs is already priced in. The end of the Ukraine war could ease risk aversion, and Trump's potential return might create conditions for investors to reallocate to Chinese equities. Then there's the example of El Salvador. Remember how it made headlines as the first country to adopt Bitcoin as a legal tender? Well, reports suggest it's considering ditching Bitcoin to secure a deal with the IMF. This just goes to show that Bitcoin's adoption story isn't as solid as it seems, especially when it clashes with government priorities. Are really more governments going to add it to their strategic reserves? I also want to mention a point raised by Kevin in one of his recent videos. He highlights how Bitcoin mining could potentially be manipulated by China due to their dominance over mining equipment production. While this isn't a major factor in my overall thesis, it adds to the broader conversation about Bitcoin decentralization or a lack thereof. And as you know, this channel focuses on China's impact on the global markets, so I thought it was worth including. By the way, Kevin's content is excellent. Check him out if you haven't already. So, where does it all leave us? Bitcoin is still an incredible innovation, and I respect its role as a new asset class, but the risks are piling up. Centralization, unsustainable passive flows, ideological overdependence, the El Salvador case, and a potential shift in capital flows to Chinese equities. If the China uninvestable narrative falls apart and geopolitical tensions ease, Bitcoin could lose some of its appeal as the ultimate alternative asset. This isn't to say Bitcoin is doomed, but its dominance is no longer guaranteed. What are your thoughts? Are you still bullish Bitcoin at this point in time? Would you buy it at 100k? And have you noticed the relation between China and Bitcoin as an asset class? Thanks for watching.